Morning, everybody. It's the 22nd of June. We're Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning.
Happy 400th episode of Talking Ball.
Oh, wow.
It's a big number, isn't it?
That is a big number, isn't it?
Yeah, so
That's coming up to
still
a
going
couple of
strong.
years.
Yeah, October 2019, I think we started.
Bloody hell.
Mm,
What have we done?
I
What
know.
have we created? It's frightening.
Yes, indeed. Hopefully, people have got something from it over all that period. Certainly, lots of content on our YouTube channel, if nothing else.
Yeah, exactly.
Okay, let's get stuck in. So, onto the UK first up, and in terms of what's going on here, just as UK have been pouring cold water on Britain's hopes for a post-COVID summer, the Times has reported that the government is set to announce looser travel restrictions for people that have been fully vaccinated. There's going to be an overhaul of the rules, which is set to be announced on Thursday. It won't add many destinations to the quarantine-free green list, but is likely to exempt the vaccinated from the 10-day quarantine when returning from the amber list countries starting in August. So that's a bit of good news. I don't know what that will mean for kids because so far they've been kind of exempt. So I guess we'll need a bit more clarity on that. But it may mean that people without kids are the only ones that get to go on holiday. Imagine that, kid-free swimming pools.
Yeah, I know. You dream of things like that, don't you?
Yeah, kind of. Guess I still like them there. Anyway, so on to what's going on with the ECB. President Lagarde yesterday said that accelerating US inflation has prompted the Fed to shift its views on risks and obviously with regards to interest rates. And she stated that spillovers can occur, though she doesn't seem to be overly concerned. And said that the overall effects of euro area inflation are expected to be moderate. So tempering any concerns there. And as a result, we are seeing, or did see yesterday, a bit of a pickup in risk appetite on the equity markets, which we'll come on to shortly. Going with that as well, we saw Brent oil hit $75 a barrel for the first time in more than 2 years, amid signs of a rapidly tightening market. One such sign is the price gap between the September and the October WTI contracts, which hits its highest level since 2014. So some suggesting now that we will see a push to $100 a barrel, which is obviously a huge increase from the fact that we saw a negative number around March last year. So been a wild few months for oil. In terms of cryptocurrency, obviously that's been big in terms of popularity because of what's happened in recent days. There's been a big old sell-off and it continues to be under pressure. This has come recently as China's cryptocurrency clampdown and concerns about the environmental impact for energy-hungry computers have caused some concern. The People's Bank of China have said it's called top banks to a meeting to discuss prohibitions or on crypto-related activity. So we've seen it slide towards $30,000, and it's stoking a few fears that we could see an even deeper move to the downside, which Steve O'Hare has been all over for a number of weeks now. So we'll come on to the charts on that shortly. In fact, Steve, I think that's pretty much it on the news front. As I mentioned, we have seen a pretty positive start with some of the indices this morning, which again we'll come on to, but it looks like you're going to start us off with cryptos today.
Yeah, I thought I might as well flow into that nicely, Joe. Yes, for me, we're in a potential head and shoulders formation. And I say potential because if it does play out, like I've said before, the measured move target of this is negative $4,000, which I can't see happening. But anyway, it's still having this formation. So this is, for me, it's a pretty good indication of supply and demand as well, this chart, that's what charts are all about. We can see the impulsive move higher has now led to a correction lower, with potential for an impulse move lower. So we see this wave one down to 47,000, back up to 60,000. Wave three made it down to 30,000. We've made it back up to 42, just shy of that. And wave five is shouldn't be. Wave three is normally the longest wave. So we take that and we project that onto there. that tells me that we're going down to $11,000 to $12,000. So looking at the shorter term time frames gives us a bit more of an indication. Here's the Elliott wave theory played out. We can see the high volume spikes on the big sell-offs, and we can see how on the 4-hour chart I've highlighted it even better. The support that we've bounced off, and we've got another one to fill in here. Nicely bounced off. It's a bullish outside 4-hour candle, so that is positive for the short term. Now, you know, I did what you'd normally do on that candle. You'd buy the close of that candle, looking for a projection higher. Really, I think we could be capped around about 36,000 now on the Bitcoin. For me, that's the sort of like the ideal level to be selling at in this impulsive move lower. However, a break of 31,100, or ideally a clear break of 30,000 would lead to a really fast move lower in my eyes, and I think we're going to 20,000.
I don't know if I've been looking in the wrong places, but usually when you see something bottom out, you begin to hear some horror stories about people that have bought it much higher, and there must be a few of those knocking about, and I've not really heard many of them. I don't know about you.
I think
I say I've heard about them, seen them on social media or Twitter or anything like that.
I think we've spoke to a lot of people over the last few weeks, and you get individual stories about that. There's nothing really advertised in the press about it, because people are in a lot of pain. A lot of people have shoved their life savings and their pensions into this, so it's more through embarrassment to admit to people that you've you know, stuffed your money in here, or even just wanting to keep it quiet because you haven't told the missus. So that's one of the things.
When it does, if it does break that level, then possibly trigger some form of capitulation. Maybe there'll be people that are thinking, Jesus, what have I done? I need to just get out of this, whatever price it's at. That's typically, you know, how markets go, right?
Yeah, I think usually you see the capitulation when people are leveraged into it, and that's when it's sort of like they're forced out because they have to either put more money in to subsidize the losses that they've got in their account. Now, if you've got, I think you've got a scenario now where people have just bought X amount of Bitcoin or spent X amount of pounds on Bitcoin. So they've bought a 0.001 of a Bitcoin, and that's the money stuffed in there, and they're just sitting there in hope that it'll come back. So they're not leveraged. The leverage on cryptocurrency is 2 to 1 at most platforms, and most of them are now professional traders only under FCA regulations. So maybe you won't get the real horror stories, but you'll just get, you know, that there'll be no real buyers here like you would get in a sort of normal market. That's where I think that basically we break 30,000, we definitely go to 20, and potentially go to 11 or 12,000. And it's, yeah, not nice to hear, especially if you've bought it at 60, 65,000. But it's the nature of the beast. For me, I still sort of start scratching my head and wondering why, if there is, I know there's supposed to be a limited supply of Bitcoin, but when you can divide it into tens of thousands, then is it that limited? And what's the next thing to come along and take over Bitcoin? That is where, you know,
Gov coins, maybe
the green energy type of cryptocurrency, the one that uses solar power to mine or whatever. That would be more readily accepted. But again, we still sort of like, you can't really go out and spend Bitcoin in the high street very easily, very readily. So that's where the issues are. So we'll watch this play out. As I say, we've got a really nice bullish candle on the 4-hour chart, so that's potentially good. So if we do catch a break below the support now, then we'll see an even sharper reversal, because you'll have people who will be trading this technically. So they'll be long on the back of that. Hop over to crude oil. That's a bit of a sort of nicer story for the longs in the market, the bulls in the market. We continue to push higher, and we're looking that like from a technical perspective on the weekly chart, we're in the fifth and final wave, not final forever, just fifth and final wave of this impulsive move higher from April last year, when we got down to $10 on this chart, and obviously on the spot market we got down to negative $40, $50. So there's me sort of saying you can't go negative in cryptocurrency. Maybe you can. So yeah, and so I think it's really sort of like, where will this fifth wave end? We've got some really classic resistance at 76.80 from the highs going back to October and of 2018, and there's other support lines here, even going back to all the way back to 2011, where this area was a supportive area. We broke through, it's acted as a resistance, potentially could act as a resistance again. So on the shorter term chart, they're looking pretty rosy. It's bounced off the 69.50 level, and that was the Ichimoku cloud as well, horizontal support, Ichimoku cloud. And again, we got a really nice bounce off 70.63 over the last 24 hours, and that looks pretty good. We're forming a bit of a bearish candle, a little bit of a topping formation on the short-term chart, so maybe we will get an opportunity to buy the dip. Gold, different story. The shorts in gold will be much happier. We've seen this breakdown quite aggressively from the $1,845 level. We saw 1,800 level act as a bit of a support, held there for a little while, but the real supportive area, we go all the way back to 16th of April, the sort of like middle to the end of April, where we saw this bottoming formation, and before the next projection higher. For me, this looks a little bit concerning. Potentially it's forming a bottom, but I wouldn't get too carried away with it yet. We've really got to hold on to this low, which comes in at 1761. We've got 1755 to 1765 as a supportive area, forming a bearish engulfing on the 4-hour chart at the moment. But are we forming a bit of a reverse head and shoulders formation? Well, too early to say, so don't hang your hat on this. But we've got this typical formation here. Then we get the reversal. So really has to hold on above 1755 for me to have any chance of a recovery higher. That would have a measured move target around about 1820, 1825. Moving on to indices. Indices snapped back really aggressive yesterday. We had this major sell-off from Friday into Sunday night, Monday morning, and then bullish engulfing, or the bullish outside candle on the FTSE when we sort of hit a low around about the 69.50 area, 69.47 on this chart, and we projected higher throughout the day. So a really positive day for the indices overall. Same sort of formation in DAX, although we look to have formed a top now, 15,665. We've formed a bearish outside candle in the last 4 hours. That closes at 10 o'clock. So what are we going to get? Are we going to get this in sort of like the buy and come back in? We'll wait and see. I wouldn't like to really do that. That's what I was thinking about the gun to head challenge, but we're an hour early. Dow Jones looking had the same sort of reaction yesterday from the European session into the US session, and projected higher, and has held onto those gains really nicely. Nice one, Dow. Nasdaq, again, similar sort of story. It's if we look at it closely, are we forming a head and shoulders formation? It's really, again, too early to tell, but we've got the left shoulder here, neckline, head, neckline, right shoulder. Let's watch that very carefully. The tech sector has had a bit of a good run of late, but if we do get a break below that 14,000-ish area, that could lead to an accelerated move lower, and the measured move target for this sort of move would be around about, where will we get? Depends where we break it, but around about that 13,730 area. Aussie 200 had a little bit of a bounce back. Commodities obviously assisting in that. China 50 looks as sick as a parrot or a dog or something. But yeah, that's for me, that's come back to the downward trending resistance, would now turn into support. So let's see how it's acted off here on the 4-hour chart. Again, bullish engulfing, which is projected higher, but a break below the 17,000 level. So that looks like a really nice psychological level. Let's stick that in there, break below there, and we could extend even further down to 16,600. Hang Seng is a little bit in the China 50 camp, under pressure on the 4-hour chart here and here. We're sort of seeing negative price action, support coming in at 28,150. Nikkei has stuck with maybe the Aussie 200 in for as far as Asian Pacific indices go, and we've had the nice reaction higher, and it's holding on to those gains, obviously going into the overnight session there, so a little bit quieter. I think that's about it. I think I've taken up a lot of the time there, Joe.
Yeah, it did well. Nice roundup as always. So let's have a quick flick through some of the currency stuff then, shall we? Not much to build on from what we've already been discussing over the last couple of days. Let's just quickly get this chart up here. So starting off with dollar index. So bullish at the moment because of this break of the wedge or the channel. Nice push to the upside here, impulsive move higher. A bit of a corrective move yesterday. In fact, looks like an engulfing candle yesterday. So quite a bit of downward pressure on that. Whether or not that's just going to be a retest of this support level down here at 91.43 remains to be seen. Given the strength of the up move, I wouldn't be surprised to see it check back a little bit and try and find some support before a renewed effort to the upside. So not overly concerned by that, but it did come at a time where it probably did need a little bit of cooling off, but it's quite aggressive, I guess, engulfing all of the previous day's session. Bit of a bounce back today, maybe made up around about 50% of the losses that we made yesterday. So that could be a key level to watch from an intraday perspective. If we take a look at euro dollar, on the flip side of that, we can see an engulfing candle yesterday. Volumes pretty much in line with what they've been on the previous 2 days of selling. So nothing to read into that really, not even as much as what we've seen on the selling, so maybe just a mild bounce back. Again, bit of selling today. I think any upside move will be capped at these levels here, which is at 119.85, and the bias is for a continuation at lower. Still of the mind that this head and shoulders top pattern could be forming. It's only a potential one. It needs to break this neckline before we can start calling that an official head and shoulders top. Ideally, I want to see it take out this level here, which is at 117.04. So still thinking lower prices, but could see a correction up to this kind of level here to sell into. If we take a look at cable, again, big move to the upside yesterday. Nice bit of volume to go with it, engulfing all of the previous day's session. But we do have resistance up here now at 139.85. So we need to see what kind of reaction we get at that level, whether or not we are going to have any legs to continue to push higher. But again, I think the bearish bias is in place here, and we will see this as an opportunity to sell into strength. Further weakness today, probably one of the worst performing at the moment, looking at that, only being on my watch list here, the only worst performer is Aussie US dollar. So we saw a bit of a bounce back in that yesterday, but it certainly wasn't as strong as the engulfing candles that we've seen elsewhere, and that's rallied into this resistance level here, which was been formed by the break of this level or this low from the 1st of April at 75.33. So from a technical perspective, that's quite a nice classic retest of a break of support on now what should be resistance, which seems to be working. We've seen the sellers step in, and I fancy that lower. In terms of a measured move, what I've done here is taken it from the high that we posted on the 25th of Feb to that low on the 1st of April. We've got some sort of rounding top pattern that's taken shape here. You could argue it's a head and shoulders looking pattern, but I would project this move down to these levels here at 70.58. So I'm thinking lower prices on Aussie US dollar. Similar situation for New Zealand dollar, US dollar, although that did have a decent bounce back yesterday and managed to reclaim the support level, having previously broken it on a closing basis. Remains to be seen whether or not this will hold on another attempt. The low now is in at 0.6923. So if that gets taken out, then we will be looking for lower prices again. Measuring this move from the high on the 25th of Feb down to that low on the 1st of April, projecting it lower, comes in at 64.27. So ultimate target of that is down there, expecting further weakness and looking to sell into strength. What else we got? Euro sterling, what's that doing today? Not an awful lot. Just continuing to grind lower. I've got big support here at 85.11. Waiting to see if that holds. Not really the most impressive market at the moment. Limited opportunities there, I would say. If we look at dollar CAD, that was interesting because, as we spoke about yesterday, it's broken out of this big channel, which was in place since the March lows. We saw a really impulsive move to the upside after a good few days of buying. We saw a pretty challenging session yesterday, almost an engulfing, but it's come back to retest the broken channel, and we seem to have come in with some buying action today, up by 0.25% already. So whether or not this is a good opportunity to buy before a continuation higher remains to be seen. From a technical perspective, I'd be a bit concerned about that candle yesterday because it was so large, but the support at 123.65 seems to be holding. That's pretty much it from me on the currency front.
Nice one, Joe.
Okay, so gun to the head trades from yesterday. Not much to speak about, unfortunately. We had an attempt at selling the FTSE, and as we discussed, the indices came roaring back yesterday, and Steve went short of oil, and oil then went on to hit new highs at $75 a barrel. So we took our medicine, we got stopped out. That's actually 4 in a row for me, which is not great, but all in all, I've had some reasonable wins in recent sessions. So still up 3R on the month. Stevie's smashing it this month with a couple of big wins in there, an 8.38R, a 3.6 and a 4.9. So he's still up well over 10.5R on the month. So Steve, what were you fancying today?
Right, we've got a bit of a two-way show here, really. I'm going to go crypto Bitcoin. Now, obviously, the risk-reward, I'd rather wait to see a break of this 30,000 level to sell Bitcoin. That is how I feel. I think selling it now is a little bit too risky, but I'm going to go for it anyway. Why not?
The payoffs are massive if you get it right, aren't they?
Massive, but obviously, if you wait till it breaks 30,000, I think if you've got more chance of that payoff. So my confidence on this is around about 50-50. There's you could go either way with this at the moment. You can sort of like get long here, targeting a move to 36,000 with a stop just below 30,000 or 31,100. But I'm sort of like been calling the bear side of this for a while now, and I'd feel like a bit of a fool if I missed it. So where am I going to get in? I'm going to get in at current price action, 32,350-ish area. I'm going to have a 1,000-point stop, which will be above this bullish outside candle. So that's again, I'm going against the bullish outside candle, which isn't a great technical reason to be selling it. So the target I'm going to put at around about 24,355, which gives me a nice round 8-to-1 risk reward. Yeah, but I think really a break of 30,000 for me, 18,000 to 20,000 is the real next level.
Cool. Good luck. I'm going to take a look at Aussie US dollar because, as I mentioned on the daily, we've got this sort of rounding formation. Let me just clean this up a little bit, start again. So just looking at that, I can sort of vaguely make out head and shoulders top. Let's just draw that on. So we've got left shoulder here, neckline, head, right shoulder, and we're breaking that down. Well, so we've got a downward sloping one, so they tend to be a bit worse. But what I prefer to see is a break of that bit there, just because I prefer horizontal breaks rather than sloping breaks. I don't trust them as much. So we've seen a nice move to the downside, sort of close below that neckline. We've seen a bit of a pullback yesterday, but it's not managed to get back above that neckline, and we've seen further selling today. So I'm of the opinion that's heading lower. Now, looking at it from a daily chart, obviously we tend to do these as intraday trades, but I need to use the daily chart in order to sort of scope out some targets really on the downside. So if you are looking to measure this move from head and shoulders, you'll take a measurement from the head down to the neckline, and then you'll project it lower. So that comes in down at this line here, which is at 70.57. So from a risk reward perspective, if you trade that really tight with a stop loss above today's highs, 53 ticks, looking for that measured move down there, you're looking at sort of 8.25R, which obviously is massive. Now, from an intraday perspective, I highly doubt that will happen, but you've got to be in it to win it. So I'm going to leave it there and just see what happens. And I might continue just to keep playing that over the next few days or so if it still looks decent around this kind of time when we speak in the morning. So that's my trade of the day.
Lovely,
Stop loss
brilliant.
75.51. Okay, so news-wise today, not loads to be looking at. We do have Eurozone consumer confidence, which is due out at 3 o'clock, and that's expected to rise to minus 2.8. We then have US existing home sales at 3 p.m. as well, and sales are expected to fall 1% month on month. So relatively quiet on the data front. We do have some higher impact events this week, such as the Bank of England, and I think there'll be some more commentary from some Fed speakers to keep an eye out for as well. Again, they'll be addressing inflation. So I think that's pretty much it from us, Steve.
Lovely, brilliant. Good luck,
Cool. Have a
everyone.
good day, everybody, and we'll be back tomorrow.
Cheers.